So what concern did Deloitte raise in respect of CalBank PLC? Let's look at what is here. We draw the attention to note 42 to the financial statement, which indicates that the bank and the group reported a net profit of this. Give me a moment. Let me pick yellow. Reported a net profit of this from the last year, which they made a loss, of that. The bank and the group also had positive net assets of this. Okay? But last year, 2023, they had a negative net asset. So if you look at what the heck is happening here, it happens that 2023 to 2024, it's good. So let's go down. The bank has an impaired capital of negative this as compared to what they had last year. It was still negative. The capital adequacy ratio, which is a key indicator for banks, as at 31st December 2024, was negative 7.22. And that is a downward, like a reduction from the 2023, which was negative 9.9. The capital adequacy ratio, as against the minimum level of 10%, as indicated in note 7.5 in the financial statement. Because as per the Bank of Ghana's regulations, the capital adequacy ratio should be minimum of 10%. You are in negative 7. That's why the auditors are doubting the ability of CalBank PLC to be in business in the next 12 months. So look at the final paragraph there. As stated in note 42, these events or conditions, along with other matters as set forth in 42, and if you get the whole financial statement, go to note 42, there are a lot of other serious things there, indicate that a material uncertainty exists that may cast significant doubt on the bank and the group's ability to continue as a going concern. This is the beautiful part. Our opinion is not modified in respect of this matter. That's what I was telling you earlier. That the inclusion of this paragraph does not mean that the opinion they had reached in the opinion paragraph is wrong. We are just telling you about something that is likely to happen in the future. So that is the material uncertainty relating to going concern and what is included there. So if you look at this and you ask yourself a lot of questions, if the minimum is 10%, why is Bank of Ghana still watching them at negative 7.22? If auditors are raising this concern, what is the regulator doing about it? So these are the questions that shareholders are now going to be asking themselves. Should we continue to hold on the shares of this company, or there is no hope for the future? That is the material uncertainty about going concern. Okay? Right. So right after that, we come to the key audit matters, which is going to be showing us significant issues that arose during the audit. So come back here. Let's come back. You can see key audit matters. So immediately after the material uncertainty relating to going concern, you see key audit matters. The beauty is that it is defined, so shareholders will know what that paragraph is about. So it says that the key audit matter is the matter that, in our professional judgment, which is of most significance in our audit of these matters was addressed in the context of our audit. In addition to the matters described in the material uncertainty related to going concern, we have determined the matters described below to be key audit matters to be communicated in our audit report. So that is the paragraph. Anything at all that the auditors encountered during their audit and how it was dealt with, they included there. So it depends on the company in question. Here, I think they raise only one key issue: expected credit losses on loans and advances. That was the key issue, because that's really the significant issue for many financial institutions. Expected credit losses on loans and advances. So it says that as at this, loans and advances portfolio was 3.5 billion Ghana cedi, which with an associated impairment loss for expected credit loss of 1.4 billion. Like, you have loans and advances 3.5. Expected credit losses is 1.4 billion. That's some huge thing there. As described in note 4.da, they mention everything in that particular case. Then how the issue was resolved. So they will explain to you. We performed the following procedure with the assistance of our credit specialist. Because remember, the team we use for auditing a bank will be different from the team we use to audit a telecommunication firm. So the credit specialist, who is part of the team of auditors, will help in this so we can reach the conclusion. So we obtain understanding of management processes around the measurement of this, including management model and methodology. We evaluate and design, So all the procedures they undertake. Based on our procedure described above, we found management estimates to be reasonable. So management had estimated that 1.4 billion, which is allowance for impairment, it's not going to come. That's serious, bro. How do you give loans 3.5 billion and 1.4 is not going to come? Like, how did you even assess the people before giving them the loan? Please, I'm not judging, right? We are just learning. But these are the questions auditors are going to be asking. These are the questions auditors. It means we are in the realm of non-performing loans. That's what we are in the realms of. So that is the key audit matter paragraph. Then from there, so you see this slide, number 6, we are going to go to the responsibility of auditors, responsibility of managers, responsibilities of auditors, responsibilities of management. Then we'll have other information. Sometimes the other information will come before these two. It depends on the presentation. So remember, in the engagement letter, when we accepted the audit, responsibility of auditors was listed. Responsibility of management was listed. In the audit report also, we want to do that, because we want the shareholders to know what our roles are. We want the shareholders to know what management did, what their responsibilities are. So it's just a reminder to the shareholders what our roles are and what management also does. So let's come to Deloitte. So you could see the other information paragraph there in that case. So if you remember, I told you that in audit reporting, you're going to be looking at other information. Now, these things, we are not reviewing them to issue audit report or express an opinion on them. No. We are just reviewing them because they will help us to confirm, find consistency in the financial statements as a whole and make certain judgments. So we are not going to be expressing opinion on these other documents we're going to be reviewing. A couple of them are listed here. Directors are responsible for other information. The other information comprises 5-year consolidated summary, corporate information, board of directors profile, profile of executive management, report of directors, the chairman's report, the managing director's report, corporate governance report, risk management declaration, sustainability report, 20 largest shareholder value added statement, and all of those things. So these are other information. And we are not reviewing this to express opinion on them. That's the idea about that. So you see here, we have nothing to report in this regard because we are not here to express an opinion on them. That's all. So that's the other information paragraph. But from there, you come to the responsibility of the directors, responsibility of the auditors, and you know this already. Directors are responsible for preparing the financial statements, adopting the internal controls, using the acceptable financial reporting framework. Auditors, what are we there to do? We remind the shareholders what our responsibilities are. Once we are done with all that, there are some reports on other regulatory requirements, if there is any, because this is a specialized entity, so we're going to be having that there. After that, it is signed, addressed, dated, and that's the pro forma of the audit report. We're done. Okay? Signed, and then address of the auditor. So this is the pro forma of the audit report. Slide 1 there for you. So you will not be required to redraft or write it. You must know what comes where and what is recorded where. So when a draft is given to you or an extract is presented to you, you know exactly whether they have recorded everything. Because sometimes, an issue that then the second slide, if you want to. Because sometimes, an issue that relates to maybe key audit matters, issue that arose during the audit and how they were dealt with, may be accidentally recorded under the basis of opinion paragraph, or may be put under uncertainty about going concern. So you, the auditor, you, the expert, you, the professional, must know that Omwe Diego, and then you can do the right thing. And that is what we mean by the audit report. And we use the Carl Bank's audit report for the 2024 year ended, prepared by Deloitte to show you what we are doing.